FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 10/9/19, almost a third of the way through the month. And, well, all sorts of great things are happening. Pieces breaking out around the world. Unemployment is at all-time lows. So I don't know about my next guest here, Jeff Socha, but Jeff, it's early in the morning, but I am breaking out the champagne.
Things are looking good. My concern is that we're getting too good. We're too used to them looking too good. So it seems like any blip in the news tends to seem people running for the hills scared when we've had it so good for so long.
Yeah, they don't. I mean, look, there's a lot of people who are traders now, brokers, etc., who never lived through a bear market, who don't remember the crash of 08, 09 like you and I do, like it was yesterday, right?
Yeah, you have almost an entire generation of a workforce that has been employed out there for the last decade who doesn't know what it's like to work at a company that's going through a recession. So it's the interesting thing about the unemployment numbers and the jobs report that came out is the unemployment rates are so low. I mean, at what point do we just say, hey, like this is full employment? Any good business that I come across out there, the number one challenge they have is talent. I think the 3.5% that are, quote, unemployed are either unemployed because they want to be or for some other specific reason. I mean, in today's economy, it seems like if you really want a job, you can get a job same day. Yeah.
And it might even be a job that you actually want to do that might bring you some personal satisfaction. The statistics, you've seen them. There's more help wanted ads than there are people looking for jobs. I mean, that's pretty remarkable when you consider where we've come from in just 4 short years.
Yeah, it's the job market is wild, and so in Austin, Texas, for example, there's something like 2 jobs for every person looking. So and the average job out there, I think in Austin, which is one of the hottest markets, is somewhere around $100,000 of income. I was talking with some businesses recently, and they said, we're just overpaying. We're overpaying, paying whatever it takes to get the labor, and so I think if somebody's educated or has a good work ethic or just really wants a job, then they probably have one. So, the fear that I have is the way the market is reacting to the 24-hour news cycle rather than the fundamentals. Because if we go from, say, 3.5% unemployment to 4%, relatively speaking, it's the same. We're still at historic low unemployment levels, full employment levels, but the news will just blow it out of proportion as this huge negative thing. Yes. And if you look over history at normal market cycles, things are going to go up and down. And so my concern is the severity that I see the markets reacting to, minor changes, whether it's in, a tweet that comes out or a report about how trade is going or, a 0.1% movement in employment numbers. So it just seems like the markets are super sensitive right now.
Yeah. On a little heightened state of awareness there for sure. Well, it's interesting. It's interesting that one number that had been kind of stubbornly resisting improvement was the workforce participation rate. And now for the first time in probably a decade, that rate has gone back over 63%. If you're not familiar with the workforce participation rate, that is the number of the entire population, the percentage of them who are actually employed. So 63%, I think it was at 66 before at one time, pre-crash, but it's starting to come back.
FSN Radio. It's all about what's next.
Silver One Resources is an exploration and development company backed by strategic investors Eric Sprott and SSR Mining. The company is focused on its Candelaria mine project in Nevada, where there is already a historic resource estimated at 127 million ounces of silver. The Candelaria mine historically was the highest grade silver producer in Nevada, generating over 68 million ounces of silver at an amazing average production rate of over 1,250 grams per ton. The project has tremendous expansion potential as past drilling has outlined deeper, high-grade silver targets for future drill programs. Silver One is highly leveraged to the price of silver and is cashed up and poised to increase shareholder value. Silver One trades in New York under the ticker SLVRF and in Toronto under the ticker SVE. To learn more, go to silverone.com. That's silverone.com.
The Financial Survival Network. It's all about what's next.
Yeah, it seems like the mood in our country right now, especially in the markets, to get back to this, is one where people are looking for the negative. It doesn't seem like there's a whole lot going on out there where people are celebrating the positives. I think we've had it really good for a long time, and there's so many things to be thankful for and positive about, and so many things we're celebrating. But instead of celebrating those, it just seems like everybody's hunting for that negative indicator. So it's kind of an interesting vibe out there where everybody's looking for the negative rather than celebrating the positives.
Yeah. Hey, you gotta, what's that song? You gotta accentuate the positive, right? They don't realize that, right? So,
and there's just so many good things going, and I think what we're going to see happen over the next 12 months in the presidential campaign is just going to continue to stir that. You're going to probably have a lot of mudslinging back and forth, and a lot of extreme accusations back and forth, and I don't think that's going to be helpful. I don't think it's going to create stability. If anything, I think it's going to make people even higher awareness than they have today.
But to some extent, don't you think people are becoming immune to all this? The press.
You would think at some point, but for some reason the market doesn't seem to be immune to it. We can get 200-point movement on a headline, even if there's no fundamental. Look at the back and forth that happens with the China tariff negotiations. There can be no real status change, no real fundamental update or meeting, or no pen to paper, and yet we'll see a couple 100-point movement in the market just over speculation and headlines. So I think maybe the general population is somewhat maybe tuning out and going, this is just starting to sound like noise that's on repeat. But for some reason, the markets are not tuning it out.
Yeah, well, markets, but you can't really go by your daily movement on the markets, right? I mean, the markets kind of move of their own accord to their own tune, and it could reflect the broader economy, or it might be totally divorced from it.
Yeah, one thing that I see happening out there that gives me a little pause is that, typically when times are good, we raise rates, and, we save the ammunition of lowering rates until there's a clear sign of the economy, trending negative. And so lowering rates recently kind of came as a surprise. I felt like, I think there was a lot of pressure to do it from various parts of the business world and the economy, but lowering rates preemptively while things are still going good, that's an interesting thing to see how that plays out.
Yeah, well, maybe they'll head the recession off at the pass, as they used to say in the cowboy and Indian movies, the Westerns of yesteryear. But putting that aside, we haven't repealed the business cycle yet, the economic cycle. At some point, it's got to turn down, right?
At some point, I'm still holding to my personal theory and my personal belief that this will continue through the fall of next year. The good economy, the good market cycle. I think we'll continue to see improvement and a positive economy all the way through the election. Post-election, I don't feel so confident, but I feel like that whatever's necessary to keep the economy going for another year is going to happen. I mean, when people get worked up over these single day movements like you're talking about, and you look at the S&P and it's up almost 20% just this year. I mean, it's phenomenal. And so if it has a pullback of a couple percent, everybody wants to think it's the end of the world. And you still look at it, if you just look at it on a 1 year basis or year to date basis, I mean, it's pretty impressive. We started the year around 2,500 on the S&P and we keep pushing this 3,000 mark, so not quite 20%, but really, really impressive. So I think it'll continue. I don't know that we'll have another 20% gain over the next 12 months, but I don't see any major pullback coming prior to the election.
Mm-hmm. Well, it's going to be interesting to find out, but it makes sense because election years are accommodative, inflationary years. Money is printed and, the Fed does what it does best, which is getting a president reelected, even if they don't like him, which they clearly don't in the case of this president, for sure. But the surge of new jobs being created, of new hiring, that has been kind of going up, but at a decreasing rate, hasn't it?
Yeah, but it's still impressive. I mean, we added 130 something thousand jobs last month. I mean, it's just astounding for people to say, hey, the concerned about the economy. If I was concerned about the economy, why would there be so many jobs being added? I think we had a few months ago where, the expected amount of jobs was going to be significantly lower than what the report came out, and everybody was surprised. So I think it continues to adjust our expectations up. My really only concern kind of in the economy is that people's expectations are kind of so high right now that even if we have good results, just not great results, that people are going to start to feel negative just because we're almost getting used to these. I mean, it's hard to get used to this kind of job growth and market growth. We've been kind of spoiled a little bit.
Mm-hmm. Yes, we have. Yeah, we certainly have. But at some point, it has to turn around. We know that. We've seen this before. We have seen this.
It has to. We've had. When you look back in history, there's been 2 recessions, 2 major pullbacks every 12 years. And the last one we really had was 2008. So you add 12 years to that, you say 2020. So history would suggest that it's around the corner. I think it would be foolish to think that we're never going to have a recession again. Really, the question is just when. And I still believe that it won't be before the election. It'll be after.
Yeah. All right. I'm kind of in agreement with you there because we've seen this game before. Election years, like we said, generally, I don't know if it's the record keeping that goes crazy or what, but they're generally higher than average growth. Certainly not recessionary years. So I guess we're just going to have to see what happens next. Jeff, we want to find you on the web, connect with you online. How do we do that?
Sure. Come see us at ARK Financial, arkfinancial.com. And you can, of course, find us on LinkedIn, Facebook, all the social channels. Connect with us wherever you desire.
All right. Excellent. And hey, give us an email to us. Let us know what you think, what's happening in the world. Employment. What do you think the numbers are going to be at the end of the year? Email us, kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network. The website is financialsurvivalnetwork.com. Sign up for the newsletter. Jeff, always a pleasure. We'll talk to you again real soon.
Thanks, Kerry. Have a great day.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.